Trying this computer. All right, welcome to week one of managerial accounting. As I mentioned in the overview, I try to set up each week in a consistent way. So we talk about objectives, supporting materials, instructor perspective, and then the discussion board and the graded assignment. So I'm going to go into the instructor perspective folder, and I'm going to pull up the week one overview slides that I've prepared. So give me a second here. Okay, sorry about that. So these are the slides for week one. So the first thing I think we owe it to everybody is to answer this question: Why are you studying this course? Why are you studying managerial accounting? Why are you taking this course? And fundamentally, I think that I would answer that from this perspective, that what you're going to learn in managerial accounting is going to help you in many realms of your professional and academic life. And whether you're a manager, key contributor in an organization, the things that we talk about in managerial accounting, you're going to find to be applicable to any type of organization, a nonprofit organization, for-profit, manufacturing, service, wherever you are. So things like, what does something cost? How do we price a product or service? When do we make or buy something? Should we outsource a product or service? Should we add a new product or service? There are many key questions that come up. And at the end of the day, the goal and the role of the management accountant is to help the organization make better decisions so that it can thrive in its industry. So let's talk about the goals of managerial accounting. So the first goal is to help the organization make better decisions. So when we think about the role of a management accountant who sits within an organization, he or she is going to help the organization make better decisions. They're also going to put in place a planning and control process. So you probably have been exposed to this along the way. So planning is, sometimes people refer to this as budgeting, and budgeting is a big part of the planning process. And control is basically monitoring how we're doing against our budget. So many of you may have budgets, and you've certainly heard of personal budgets. Well, every organization has a budget. And there's many reasons why organizations have budget. One is to evaluate how the organization is doing towards its objectives. And the third goal of management accounting is to influence the overall strategy of the organization. And so that, again, it moves in the right direction, achieves its goals, and accomplishes the things that it's put in place to do. So what are the key contributions from the managerial accounting profession? And it is a profession within the accounting world. So first is to understand and get cost right. And in some cases, that's pretty straightforward. So if I'm working in a merchandising company, if I'm working at a big retailer like Costco or Amazon or Walmart, then cost is pretty straightforward. It's what I purchase from my suppliers. And that generally is pretty straightforward cost. But in many organizations, cost is a little more elusive. Manufacturing organizations, service organizations, and the United States and many other industrialized countries now are really more service oriented. And so in knowing the cost of delivering something, whether it be a service or a product, is not quite as straightforward as you may think. And so understanding and getting cost right is at the foundation of the management accounting profession. And when we get to activity-based costing in a few weeks, we'll see why that it may be a little more tricky than you might expect to get cost right. Then we want to provide reliable models to enable better decision making. Okay, so there's several models that we'll look at in this course. We'll do kind of an overview of some of the key models like cost, volume, profit, differential costing, target costing, and that these are all designed to help the organization make better decisions. The third goal is to establish and manage processes that enable effective planning, also known as budgeting, and control or monitoring of the organization. And then the fourth is to understand the cost structure and how key decisions impact the competitive strategy. So, if you think about any organization, whether it be a healthcare facility, a pharmaceutical company, a nonprofit organization like MCPHS, they make key decisions all the time. And so part of what the management accounting has to help the organization decide is that when they make key strategic decisions, what's the impact going to be on the cost structure? Because that's going to impact their ability to make profit or make a loss and their pricing decisions and so forth. So key takeaways from managerial accounting. At the end of this course, you should understand why knowing what things cost is essential and which decisions it influences. Okay, you may not become an expert at knowing how to calculate costs, but you'll at least have some exposure to it. Understand cost behavior and key decision support approaches. So cost behavior we'll get into soon, and we'll look at cost behavior, and we'll use a model called cost volume profit analysis. Know the elements and importance of effective planning and control. We'll review and understand pricing alternatives, including target costing and pricing. We'll review and understand strategic cost management and its impact to organizations. And we'll understand the role of ethics in the field of management accounting. That may seem like a lot, but I'm going to break it down week by week and explain it as clearly and as concisely as I can. I'll also provide you supporting materials and videos. And at the end of the day, the goal is not to make you a management accountant. The goal is to expose you at a fundamental level to some of the key ideas, tools, and methods that come out of the managerial accounting profession, because you're going to be exposed to those when you get into the work world, whether it be a for-profit or non-profit organization. So I'm a big believer that everybody should have exposure to this course. Everybody who's going to work in any type of operation at any key contributor level or management level, because what we talk about here is going to be fundamental to every organization. So let's jump into chapter 1 and talk about what is managerial accounting. So when we think about the management accountant, let's talk about what he or she does. So, and when you think about the management accountant, you may have heard the term CFO, Chief Financial Officer. So in small organizations, the CFO wears multiple hats and is both the management accountant and the financial accountant. Big organizations, it might be a specialized area, but the characteristics of what the management accountant does is they're there to satisfy the needs of internal users, managers, other key decision makers, and helping them to make better decisions. Typically, they're focused on the future, as opposed to financial accounting, which is really focused on history and getting financial reports out to investors and creditors. They don't need to comply with the set of rules. The set of rules for financial accounting is called GAAP, or Generally Accepted Accounting Principles. The data is usually very detailed and includes both financial and non-financial measures. So in the chapter, you'll see this comparison between the management accounting and the financial accounting world. So some of you I know have taken financial accounting. So financial accounting is basically focused on preparing income statement, balance sheet, statement of cash flows, and providing those to investors and creditors. So it's looking at history, following a set of rules called Generally Accepted Accounting Principles, and then submitting those for key stakeholders who make investments or loan money to the company. That's the financial accounting world. Managerial accounting is really focused on helping the organization, management, and other key decision makers make key decisions about the future. And so this, where the financial accounting world, you'll hear things like 10K and 10Q, which are annual and quarterly reporting tools. In the financial accounting, in the managerial accounting world, it's really much more ad hoc. So, and includes both financial and non-financial. So the other thing that we're going to get into as we evolve through this course is the planning and control functions. And so what happens with every organization is every organization needs a plan. They need to know where they're going and how they're going to get there. So we call those mission, strategies, and budgets. That's the whole planning portfolio. And then we have to control against that. We have to monitor and see how we're doing. So the management accountant, his or her role is to put the process in place that enables the organization to do that effectively and efficiently. So here's a little bit of detail about what the planning function is. It's the strategy, it's the mission, and it's the detailed roadmap that is called the budget. So we'll get into this in more detail later in the semester. So chapter 1 is more or less an overview of where we're going. Then the control process is essentially to monitor how things are going. Okay, so again, the process, the role for the management accounting is to put a process in place so the organization can both put a plan in place and then monitor how they're doing. The management accountant is not responsible for delivering the budget. The role of the financial and managerial accounting world really is to be more like the referee on the field than it is to be one of the players who's responsible for achieving things. So when we look at the key functions of finance and accounting personnel, here's one example of what it might look like in a large organization. So typically, we're going to have a board of directors for a publicly traded company or for a corporation. They're going to appoint a chief executive officer or a president, and then they're going to have a senior management team. One of the senior managers they're going to have is a chief financial officer, a CFO, and he or she in large organizations is going to have several other organizations that will report to him or her. If this is a small organization, the chief financial officer may play all of these roles: the controller, the treasurer, the internal auditor, do taxation, and do both managerial and financial accounting. So there's a lot of responsibility in the financial world, whether it be for a small organization or a large one. So here's some definitions around what each of these individual jobs are. And I'm going to let you read through this. I'm not going to bore you by reading through this, but basically, the CFO, oversees the entire financial and accounting world, and within that sits the management accounting world. So the other thing that is discussed in chapter 1 is the ethical conduct and how to resolve an ethical conflict. So when we think about ethics, ethics is a very important issue in every profession. And if you think about it in a healthcare profession, the question is, legally, I may be required to perform basic services to help somebody from resolve a serious health issue. Morally, how much more do I have to do for the person to help them get to full health? And so there's legal is usually the basic minimum requirements that we expect of any profession. The ethical responsibilities is how much more should we go above and beyond that. And so ethical guidance gives us a compass and ways to think about dilemmas that we're going to face in our career. So and certainly in the finance and accounting world, there are many ethical problems that come up. And back in the early part of the 2000s, companies like Xerox and Enron and WorldCom were on the front page of the New York Times and the Wall Street Journal on a regular basis, mostly because of breakdown in ethical and legal matters related to finance. So you can read through some of the things that happened at Xerox and at Enron, but at the end of the day, what we expect and what we need from the financial accounting world is honesty, fairness, objectivity, and responsibility. So part of that is this idea that we're going to remain competent. And that we're going to stay abreast of the changing needs in terms of rules and regulations. A big part of it is to be objective and to be independent from influence that would distort what we think is actually the right numbers and the right way to do things. So what happens a lot in the management accounting world is that certain managers or individuals may want the numbers to look a certain way, and the role of the management accountant is to be independent and objective and to call the shots the way he or she thinks they should be called. Just like a referee would in any sporting event. We have referees there to ensure the game is played fairly. And one of the roles of the management accountant and the CFO is to make sure that everybody follows the rules and plays things and reports things in a fair way. So the 4 standards are competence, confidentiality, integrity, and credibility. So competence exists in every profession. Every profession, when they talk about ethical responsibility, is going to talk about remaining competent. Right? That's the continuing professional education. We learn things. We have to keep them confidential. We don't talk to the general public or to our friends and family about things that are really company confidential. And very important is that we remain objective, we keep our integrity, and that we report things as we see them. Even when management may not be happy with the results, if we think that those are the ones that the company has actually achieved, then that's what we have to report. So, and then if we run into a conflict, then we have to decide how to resolve that. So the code of ethics talks about how we could resolve it. Talk to your supervisor if he or she's not involved, and report one step above. And if necessary, then you can reach out to an ethics counselor, office of ethics if they have one in the organization. And in some cases, you may have to consult your attorney. So the one of the final things talked about in chapter 1 is how accounting systems help organizations. So certainly beyond the scope of this course, but one of the things that we should recognize is that the accounting profession has been very adept and quick to embrace technology. So, and that has really helped the accounting profession really enhance the services that it can provide to the organizations that it supports. And so one of the key, so in addition to having most of the transactions computerized or make use of technology to help the organization get a better handle on where things are going financially, the financial accounting world has also embraced things like enterprise resource planning systems. So, and these are basically systems that make a common database across the organization so that different parts of the organization all have the same data dictionary and the same ways of communicating key financial and operational data. Again, beyond the scope of this course, but just keep in mind that a big part of the managerial and financial accounting world is to utilize technology, so it can provide information in a timely and professional manner to the organization, and can make the flow of data across the organization more seamless. So there are some terminologies that are in chapter 1 as well. And I'm not going to focus on those right now. There are things like period cost and product cost. And right now, we're going to just put those on the side. We will talk about direct cost and indirect cost later in the semester. But during this point, I just want to briefly touch upon them. So when we think about understanding the cost of something, which is essential part of what management accounting world does, really at the foundation of the core of what the management accountant brings to an organization, we often break it up into 3 major categories: direct labor, direct material, and then overhead. And so if I look at any cost object, what it costs for the computer that you're using now, or the automobile that, or any cost object, how much it costs to deliver a particular service, software project, legal service, engineering project, any cost object, product or service that we want to know the cost of, we generally can break it up into 3 major categories: direct material, direct labor, and then overhead. And direct material and direct labor, we usually can determine those costs with a high degree of accuracy because we can easily trace those to the cost object. So if I'm looking at a Tesla automobile, for example, I can tell you with a high degree of accuracy the parts that go into that, the windshields, the tires, the leather, etc., and the cost of each of those parts. And I can also tell you with a high degree of accuracy the amount of direct labor, that's the amount of time that people who are actually assembling the automobile spend on that assembling that car and what we pay them. So those two cost elements I generally can tell you with a high degree of accuracy. The third is overhead, and it's called manufacturing overhead in Chapter 1, but can be overhead or indirect costs for service organizations too. So those are all the things that are not direct material and direct labor. And in service organizations, that is often the majority of cost. So things like rent, utilities, depreciation, and all the salaries of the individuals in the organization, those are all indirect costs and very important. And when we get to activity-based costing, we'll see how we're going to apportion those to the cost object. But these are the three major elements of cost that we'll come back to and look at in more detail later in the semester. And I'm not going to worry about non-manufacturing cost right now, but those are called period costs. So I'm not going to worry about the three inventory accounts right now and what happens to them. We may come back to that later in the semester, so I'm just going to skip over this. And we're not going to worry about income statements for a manufacturing company as well. All right, so you don't need to worry about those as you review the materials in Chapter 1. So really the focus in Chapter 1 is to go through the first 5 or 6 sections. All right, so thank you, and I look forward to seeing your comments on Blackboard and your graded assignments.